Hi everyone, I'm glad that you guys are coming back to see those videos. I've been reading the comments and there's loads of positive feedback, which I'm really grateful for. I'm really happy that you guys find value in those videos. So keep on commenting, liking the video, subscribe to our channel, and as you probably already know, that way you increase your chance of winning the full Forex training that we can provide you with at the end of the giveaway that we're currently doing. To see the full terms and conditions, make sure to head over to our website trendlineforex.com and you can read all about it there. Also, in this video, we're going to be talking about an instrument that we like to use on a daily basis. This is a mandatory part of our technical analysis, and like I said, we use it on a daily basis. We managed to find the best entry levels by using this tool, and also to predict a future price movement pretty much to the point every time that we enter a trade. So basically what we're going to be talking about is the Fibonacci 2. Before that though, we're going to go over the basics. We will see what is the logic behind it and pretty much where it's coming from. Then we're going to move on to some practice, and obviously I'm going to show you some examples of how to use the Fibonacci 2 the best way possible in order to improve your trading. So watch this video until the end. Don't forget to comment below this video, hit the thumbs up, and also subscribe to our channel. Get involved in our free Telegram group. You can find all the links in the description down below. So enjoy this video and let's begin. Who is Leonardo Fibonacci and what's his theory about? Leonardo Fibonacci was an Italian mathematician who created a unique series of numbers that later became known as the Fibonacci numbers. This series of numbers can be infinite, and each subsequent number is formed by the sum of the previous two. It starts with 0 and 1, and respectively the third number is 1. Then we have 1 and 2, which forms the next number in the series, 3. And it carries on like this. The Fibonacci numbers are a whole science, and they're found everywhere in nature and the universe, and they can be applied pretty much anywhere. It's also very important to understand what the golden section is and how it is obtained, but for more detailed information, check out our Fibonacci course. This is probably the most popular spiral you've seen before. You can clearly see that the Fibonacci sequence is everywhere around us, and like I said, it can be applied anywhere, even in the financial markets. Stay tuned to the end of this video to find out how you can use the Fibonacci sequence when analyzing the market. Application in the financial markets. Over the years, we have seen that this instrument works extremely well and precisely when used to analyze various financial instruments. Personally, we at Trendline use it on a daily basis, and I'll show you the couple of tools that tell us when we can expect a reversal, basically an end of a correction, and in this way we'll receive an entry signal, as well as the other tool that tells us how far we can expect for price to go to, or basically where to collect profit. Thus, once we know when to enter into a trade, as well as when to exit that trade, all that remains is the proper money management and the position management as well, and that way we have a fully prepared strategy with which we are ready to trade successfully. As I have already mentioned, the golden ratio is the thing that we pay most attention to. These are the numbers 0.618 and the remainder of 0.382. We can also observe them as correction levels of 61.8% retracement or correction and 38.2% correction. These will be the levels we will monitor when using the Fibonacci instruments. Now, I recently mentioned a couple of tools, one that gives us the moment of entry, the Fibonacci retracement tool, and the other that gives us potential target levels, which is called Fibonacci expansion. Now let's start with the Fibonacci retracement. Okay, so like I said, this instrument gives us a potential entry level when observing a certain move. So in this case, let's say we're expecting for price to continue to the upside, or maybe it has been trading inside of a range, trading sideways, and it then broke out, and we want to see where will be that level at which the pullback will end, so we can then enter a long trade and anticipate the next move to the upside. Okay, or maybe price was already trending, right? And so we're looking for a continuation of this move to the upside, but we want to, get involved at the best level possible. So what we're going to do in this case is we're going to be looking at, the most recent low that price has created. So basically swing low, which in this case is point A. Then we're going to see where price will go up next, point B. And once it starts the pullback, that's when we're going to take our Fibonacci retracement to, and we're going to drag it from point A to point B. What's going to happen then is it will give us a certain retracement levels, which will be shown in percentage. Again, like I said, what we're interested in will be the 38.2% level and the 61.8 as well. So I'll show you how this looks on the chart as well. But there's a couple of certain levels that we're going to be looking for, and in case price comes back to any of them, we want to see what's going to happen then. It could then give us a candlestick pattern, maybe some type of a chart pattern on just a signal that it is time to enter a long trade, and that retracement will come to an end and another upside move will start. So that's how we find the entry level based on the Fibonacci retracement tool. Okay, obviously you can use that in an uptrend, and you can also use that in a downtrend as well. So let's say price has been trading to the downside already. We then have our most recent high, point A. We see price pushing to the downside and finding support at a certain level. That's where our point B is, and what we want to find out is where is point C, which is pretty much our entry level. Okay, and again, we're gonna drag our Fib retracement to from point A down to point B, and this is going to give us the retracement levels right here. Once we see price, with a pullback to the level that we're looking for, we're then going to be looking for a certain market reaction, and we can then anticipate the next move to the downside. So let's move on to the chart and see how this looks there. Okay, here we're looking at the dollar Canadian on the hourly chart, and it doesn't really matter what time frame you're looking at, but this too works pretty much on all instruments and all time frames as well. So what we're looking at here is this upside move that has been going on for a while, and recently we had this strong push to the upside, indicating to us that the market has enough strength to continue even higher. Now recently a pullback has just started, and we want to see to what level we could expect this pullback to end, so we can then get in on time to catch the next move to the upside. So in this case, we can obviously use the Fibonacci retracement tool that we've been talking about in the last couple of minutes. So what I'm going to do is I'm coming up to this toolbar up here, and I want to click on the Fibonacci retracement tool. Now, like I said, we're looking at point A down here and point B up here. And we're going to drag this to from wick to wick. That's what we like to use here in Trendline Forex. Obviously, you can use the bodies, but we've been using the wicks, and I think that way this tool works best. So I'm going to drag from swing low up here to swing high, and as you can see, what I get here is all the possible retracement levels of which we could expect for price to reverse once it reaches them. Okay, now first we've got the 23.6% level, which is not as strong as the 38.2 or the 61.8. Remember, those are the two levels that we're mainly looking at. Now the 23.6 level would be just a very short pullback, and when we have such a strong move, sometimes we could expect a short pullback, but most of the time we want to see a little bit deeper pullback, a healthy pullback for the market in order to continue and make at least the same amount of pips to the upside after the pullback. Okay, so the next retracement level would be the 38.2 level, which in my opinion is probably the best pullback level to enter at, of course, if the market presents us with opportunity at this level. Okay, then we have the 50% level, which is pretty much 50% of this whole move. And after that we have a 61.8 retracement level, which is the golden ratio of the Fibonacci sequence, and it's also a very strong level. So let's say after this move we see price with a pullback at 61.8 level. Okay, once it comes down here, we then want to see what is going to happen. Is it going to break below, or it will reverse at this level? Of course, for this purpose, we would use, different type of analysis, such as, candlestick chart patterns, figures such as double bottoms, flag patterns, whatever it may be, but anything really to give us an indication that price should reverse at that level, okay, and continue back to the upside. Basically, they continue to move from before. Okay, so that's what we're looking at, and of course you don't have to look at a single level only. What you can do instead is you can draw a zone between the 38.2 Fib retracement level and the 61.8. Okay, right here you've also got the 50% Fib level, and so this is a buy zone in this case, and it really gives you a lot of opportunities to enter as soon as you see a reversal happening inside of this zone. Okay, and since those are the most important retracement levels, that's where we want to look for entries from now on. But of course you've also got the 78.2% retracement level, which is really the maximum pullback that you could expect from a certain move, because if price breaks below this level as well and it continues lower, coming back to the previous lows right here, that will probably indicate that market doesn't have enough strength to actually continue higher. But there's quite a lot of sellers at this level and they keep pushing price to the downside, so in this case you wouldn't be very certain if you should be buying, and you should probably wait and see what will market do next. Okay, like I said, we're mainly looking at this 61.8 retracement level as well as the 38.2 retracement level. Okay, here we can see a downtrend example. So if I just zoom out, we can see that price has been in a downtrend for quite some time. It then held sideways for a bit, and recently we had this break of previous structure and a strong push to the downside, also giving us a signal that we will most likely see a continuation to the downside and pretty much, market keeping the downtrend. So what we can do in this case, we can either drop to a lower time frame and place a Fib retracement level, or we can do that straight here on the 4-hour chart. This is our point A, most recent high to most recent low. Okay, now as of right now, this is where point B is, but if you do see price continuing the push to the downside and then starting a retracement from here, you will have then to adjust the Fib retracement to point B. Okay, but in this case we're looking at this most recent low, which is not yet confirmed. So from now on we could expect for price to come and test the 38.2 level and possibly reverse. Or if it continues above it, then we're going to be looking for the 61.8 level and a potential reversal from there. So we really have, a couple of entry levels at this setup together with the 50%, in fact, because looking at, the 50% level, if I place a horizontal line, you can see that perfectly aligns with previous structure here and here as well. So combining the Fibonacci retracement to or the Fibonacci 2 in general with other types of analysis such as support and resistance, candlestick patterns, trend trading, that's how you really increase your chance of winning in the market. The next two is called Fibonacci expansion, and the first one was the one that gives us the entry level. But once we enter a trade, we also need to know where to exit this trade, right? So with the Fibonacci retracement tool, we only needed point A and point B in order to find point C. Now in this case, we've already got point C and we need to find point D, which would be our target level. Okay, so what we're going to do is we're going to place the fib expansion from point A up to point B, and we also need the third point, point C, in order for this to work. Okay, so we're going to have to drag from point A up to B and again down to point C, and that would then give us the potential target levels, which in fact is not just one, but it will give us 3 target levels to look for. So in case of a strong move in our favor, we know that we don't have to close the trade at the first target level, but in fact we can keep it open, hoping to reach target number 2 or 3, or of course you can exit the trade and close out just half of the position at the first level and then the second half at the second level, or depending on your money management plan, you can create a full strategy on how to enter with different lot size, maybe on each retracement level, and then how to exit this trade little by little on all the target levels. If you want to do something like this, if you think this is your type of trading, then you can get in touch with us and we can create a full strategy around the Fibonacci tools. Like I said, this is something that we like to use on a daily basis. Okay, so I think it would be much better if I show you a practical example. So let's head over to the chart again. So again, back to the example with the dollar Canadian here on the hourly chart. This is the fib retracement that we had from point A to point B, and like I said, we are expecting to see at what level this pullback will end, so we can then get involved and anticipate the next move to the upside. Right, so let's say for example price has already touched the 38.2 level and it has started that move to the upside, so we've made our entry down here. Okay, just for example, right? So what we're going to do next is we want to find out where our target levels would be. So in this case, I'm going to be using the fib expansion tool, and again I'm going to drag this down here from point A up to point B. And then I'm going to come down to point C, which, like I said, in this example would be the 38.2 level. So pretty much down here. Okay, I get this red line showing me that I've got the fib expansion active on my chart. And if I squeeze the chart in a little bit, you can see I've got those potential target levels to watch out for. What I'm going to do instead of that is I'm going to move up to the 4-hour chart, and you see that if that pullback ends down here, then my first target would be the 61.8 expansion level. Okay, again we're looking at the same percentages, so that means 61.8% of that initial move from point A to point B. Okay, now in this case we're looking at potential target of 134 pips. Okay, that's great. My second target would be 100% of that initial move, so pretty much the same amount of pips that I have from point A to point B, and I'm looking for that from the end of the pullback up here to the second target, which means a potential target of 218 pips. And obviously you've got the third target, which is 161.8% of the initial move, and that's 350 pips to the upside. Okay, not very often you will manage to hold those positions for that long, but if you are expecting a long-term move to the upside or to the downside, that's how you can find those really far targets that will give you probably the best trades on your record. Okay, most of the time what we like to do is to place our target at the second level, and then if we see that price is really struggling to break above the first target level, we can then exit our trade. Or like I said, you can exit your half of your position here at the first target and then let it run. In case it reaches the second target, you can exit 1/3 of your position again, or you can close out the full trade. But looking at those levels, you see looking left, you've got previous structure on all of those levels as well. So in this case, this is a really good indication that price could actually reach any of those levels, or in fact each one of those levels in the near future. So a very useful tool. Now let's say for example that this pullback ends right here around the 23.6 level. So what we're going to do then is point C will be down here, okay, in case price just reverses right now and it continues higher. So you see those target levels will move depending on where point C is. Okay, so if we place our point C at current price levels, you see that we've got the first target at 122 pips away from current price levels, second target at 203 pips of potential profit. So very useful too. If I drop down back to the hourly, I'm just going to delete the fib retracement, and just to see how this has performed in the past, what we're going to do is, let me just zoom in. Let's see a previous move where we've had a certain retracement level reached. So we're looking at point A down here to point B. Price has reached and reacted of the 61.8 level. Right spot on that level we have a reversal. Okay, so in this case what I'm gonna do is I'll just delete the retracement tool so we can see that better. I'm now using the fib expansion tool. Point A up here would be my point B and point C down here. So if we did make an entry around the 61.8 level, basically pretty much on that reversal, you see very quickly price has reached the first target, 46 pips of potential profit. Then we have reached the second target, 76 pips of potential profit, and eventually we have reached third target as well, which is 130 pips to the upside. Okay, so like I said, very useful too. It works really well, especially when combined with fib retracement and other types of technical analysis as well. Okay, looking at the same thing here on euro dollar, we have our fib retracement placed already. We are expecting for price to come and retest the 38.2 or the 61.8, or any level in the middle of that, and then we want to use the fib expansion tool, which will look something like, okay, let me just delete that, will look something like this. So let's say that was the 50% fib level here at 1.1520. So let's say we see price with a pullback to the 50% level, and that's where we see the reversal starting. So in this case, this would be our point C. I'm going to squeeze in the chart, and here are our three potential target levels. First one, 109 pips of potential profit. Second one would be 176 pips. And third one, a potential profit of 285 pips. Okay, so very powerful too. That's how we like to find our target levels, and like I said, we use it pretty much every time we enter a trade, and we manage to get that take profit to the point every time when we have a winning position. So I know I've said this a few times already, but as you can see, the Fibonacci trading strategy is a very powerful tool that you can implement in your own trading, and that way you can increase your profits, your winning positions, and your confidence when you're trading. Okay, if you want to look at the full course that we have, make sure to head over to our website trendlineforex.com, and there you can see that this course includes over 20 video lessons, more than 130 minutes of education, as well as 2 hours of mentoring with a pro trader from our team. Okay, if you don't want to buy the course, then make sure to comment below this video, subscribe to our channel, and that way you can win our full Forex training, which actually includes this same course in it, as well as a few others, and a lot more as well. We've also got other prizes for third and second place as well. So enter the giveaway by sharing with us what do you think about this video. Do you actually use the Fibonacci tool, or what other indicators and tools you like to use in your own trading? I'll make sure to get back to each one of you guys. Stay tuned for the next videos to come, and also join our free Telegram channel, as you don't lose anything, but you will get a lot of educational posts in return. Okay, I'll see you in the next one. Thanks for watching. Please don't forget to watch our last 2 videos where you can find more valuable information. Check out our channel for more trading related videos. I wish you all a successful trading, and I'll see you next time.